Hello and welcome to ETF Pulse, ETF.com's vodcast. I'm your host, Kristin Myers, editor-in-chief of ETF.com, here as always with Nate Geraci, my co-host and president of the ETF store. And also need to say this because it is ETF.com Awards Week, also an esteemed member of the judging panel for the ETF.com Awards. Nate, thanks as always for being here. Let's take a quick look at the Pulse rundown. So first up, we will be chatting gold, or more specifically, GLD. Now, it has outperformed SPY since it launched 21 years ago. I think my math is correct on that one. And now it has over $100 billion in AUM. Then we're going to be talking about inflows, specifically to how investors are flocking towards those short-term treasury bond ETFs, thanks to a lot of volatility that's been going on in the markets lately, today being no different. And we talked about Kraken last week. This is just an opportunity for Nate to squeeze in some kind of crypto chat. We are going to be talking about Schwab. They say that they're going to offer direct crypto trading at least within the next year. And last up, as I mentioned, it is ETF.com Awards Week. So we will be chatting a little bit about the awards, what we're looking forward to, what we're not, which is nothing, potential surprises. So we've got an action-packed episode for you today. So first up, let's chat GLD. It looks like all that glitters really is gold. I was wondering how I was going to work that phrase into my intro somehow, and I feel really, really proud. So you actually tweeted about this, Nate. You've got, so gold up 589%. This is all since it launched in 2004, in November 2004. SPY only up 500, I say only, SPY up 551%. VNQ up 291, EEM up 196. I should actually say what these tickers are. So VNQ is the Vanguard Real Estate Index Fund ETF. Then we have EEM, that's the iShares MSCI Emerging Markets ETF. EFA is up over 180%. EFA is the iShares MSCI EAFE ETF. And then AGG, it is up 90%. And TLT, to round it out, which you famously called the Widowmaker in one of our episodes, up 81% since 2004, TLT being the iShares 20+ year Treasury bond ETF, and AGG being the US aggregate bond ETF from iShares. So gold, I was going to say SPY, gold beating the competition right now.
You know, it's amazing. I was running performance just year to date on GLD, and it's up now over 30% just in 2025. And that got me curious, just looking back, well, how has this performed over a much longer time frame? And so I ran the chart that you just referenced, and it's amazing to see gold has literally outperformed nearly every major asset class. Now, we should be clear, you know, this is since its inception in November of 2004. So that's an arbitrary date, right? That's just a random date.
Yeah.
But we're still talking, to your point, 21 years here. And I just think it's amazing because gold is such a polarizing asset. You have, you know, one group that absolutely hates gold. They think it's worthless, right? It's just a rock, can't do anything with it, doesn't pay interest, no dividends. And then you have another group that absolutely loves it. And, you know, it's been around for 5,000 years. It's been a store of value, et cetera. So gold to me is just always an interest.
From space.
Yeah, I just say gold's always an interesting topic because it brings out the passion in investors. But I like here that we can assign hard performance numbers to it and look back since GLD's, again, inception in 2004. That's pretty remarkable. I don't think a lot of people would have expected it to outperform US stocks. Now, we did have the financial crisis in there, right, in 2008, and there's no COVID crash.
You have to look at this chart, which is pretty interesting. And again, you know, go on to Twitter or X at Nate Geraci and take a look at this chart. And it is pretty interesting. And I even pulled up a SPY versus GLD chart using the compare tool on ETF.com. And what I love is that GLD and SPY usually track each other. They kind of follow like the same sort of trajectory, but then you have these pockets of very clear, I don't want to call it divergence, but clear separation. And most of the time, GLD at least recently, really pulls ahead of, well, SPY recently had pulled ahead of the pack, but then you have gold pulling ahead of the pack in these moments of crisis, right? And that is happening yet again right now. So you at first had GLD way above SPY, then they crossed SPY taking off over GLD, and now we're crossing again, where GLD is now outperforming SPY. And if you just look at over the past year, you see them really neck and neck. And now starting in, I'm going to say end of January, beginning of February, this is when the trade war started to go on. Again, you start to see that spread really start emerging. So again, I mean, as you were mentioning, year to date, SPY is down about 10%. Year to date, gold is up about 27%. It just says to me that this needs to be a clear thing that you have, especially if you're investing in the long term, something that you need to have in your portfolio, especially in those times of economic downturn or market volatility. It seems like a no-brainer, because then even in the times of prosperity, even when the markets are up, you're also going to be up in GLD.
Yeah, I mean, you just laid out the rationale for owning gold in a portfolio. I always say gold marches to the beat of its own drummer. You don't necessarily know what it's going to do at any given point in time, but if you look historically, you do have these periods like we're seeing now where it does decouple from stocks, typically in times of chaos or crisis. And, that's why you own it in a portfolio. It has a low correlation, or it's uncorrelated to other asset classes. By the way, I have to mention, you noted my tweet with a chart in it. I don't know if you saw the other tweet that I had where I said something to the effect, imagine that you're an active equity fund manager and you're touting all of these, fancy investment strategies, right? You're a quant fund manager, or you have the special sauce to pick stocks that are going to outperform. And you look up and you see that you've been outperformed by this rock, right? Because if gold's outperforming the S&P 500, we know the vast majority of active managers underperform the S&P 500, which means the vast majority of active managers are going to be underperforming gold. Like, that's got to hurt.
This is we've said this before, and it's not necessarily a knock on active or a knock on active managers, but it is true, and there is historical data of this. In totality, passive tends to beat active handily every time. I mean, it's great.
Yeah, and so if gold's beating passive, then it's probably beating active as well. I just think that's kind of it's ironic. It's not an apples to apples comparison, but I just can't imagine you're this, fancy active manager and you look up and
you see GLD, year to date up 27%, and or
go back over the past 21 years since GLD's inception. You probably have trailed that if you've been around that long.
Yeah. I'm surprised though that there's a lot of people that don't like gold.
But it gets back into what I was saying before, and that's why it's polarizing. It doesn't pay interest. There's no dividends. It's only worth what somebody else will pay for it, right?
That's literally like it's like almost everything that we have in welcome to capitalism.
Right, but trying to place a real value around that can be difficult. And so if you come from the old school and you want to have a valuation model and try to really come up with what a legitimate value is, you really can't. I mean, you can do some stuff around supply and demand and those sorts of things, but that's again why it's such a controversial asset in a portfolio. But it's proven its mettle now.
Yeah, I mean, there's a quote in Wolf of Wall Street that what's his name says, it's fugazi, just he whistles. I can't whistle, but
Did you see GLD actually is now over $100 billion in assets? And the reason why I bring that up, that's noteworthy in that if you look across the entire ETF universe, there's something like 4,100 ETFs. There's only 12 ETFs total that are over 100 bill. And GLD is now in that club. If you look, the next on the list would be the iShares Russell 1000 Growth ETF, ticker IWF. That has about 92 bill. It actually was over 100 bill a few months ago before the recent downturn. But I think that's noteworthy as well to see GLD above 100 bill.
I mean, year to date, speaking of those kind of like inflows, I mean, year to date, GLD has raked in about 8 billion. And if we want to look at just over the past month, so 8 billion year to date, over 2 billion has come in just in the past month alone. Okay, so then speaking about inflows amongst all of this market volatility, this is such an interesting and exciting time for us to be kind of chatting. We've talked about it a little bit. I can already see you kind of starting to smile because you know exactly what I'm about to talk about next. Okay, so let's look at inflows into short-term treasury bond ETFs. And we're not just looking at it because, you know, we just want to bring that up, but because most of the inflows lately, at least over, you know, just the past week, have been into these short-term treasury bond ETFs. So I actually pulled up the Pulse tool, I guess we could say we're named after, and I'm just looking at the top flows. The top three are all short-term treasury bond ETFs. So you have SHV, BIL, and I'll name all these tickers in a second. You've got BIL, you've got BSV, then you have the semiconductor ETF, which of course semiconductors kind of made a bit of a comeback. There's a massive tech sell-off, so you see people piling into that trade. But then you have SGOV. And so that's kind of the top, let's see, 1, 2, 3, 4, top five. Four of those top fives inflows are, again, these short term. So the SHV iShares Short Treasury Bond ETF, BIL, that's the Spider Bloomberg 1 to 3 month T-bill ETF, BSV Vanguard Short Term Bond ETF, and then, of course, SGOV, which is the iShares 0 to 3 month Treasury Bond ETF. Now, here's what's happening in the markets for everyone who is either kind of had their head buried under a rock or in the sand or something like that, or who has just plain been ignoring everything that's sort of been happening. I mean, we've had earnings, which some of these earnings headlines have kind of, I think, revealed a lot of, or really kind of exposed even more or brought about more investor anxiety about where the economy is going to go going forward, as a lot of these companies have said that they're anticipating costs to go up and revenue to go down. We've had trade war just kind of continuing to really drive that investor anxiety. We've had new news out this week that China is going to retaliate against any nation that decides to, you know, join the United States and ganging up against them. And then now you have Trump, who has called Fed Chair Jay Powell Mr. Too Late and also, quote, a loser. The question has been brought up yet again, which is, this has happened before. For anyone that like either wasn't paying attention in Trump's first sort of term, Trump has had a long-standing feud. It might be one-sided, but he has had a long-standing feud with the Fed and particularly Jay Powell, always over interest rates, and rather the Fed's refusal to lower interest rates when he would like, which of course makes investors anxious and nervous about the Fed's independence. The US dollar has dropped lately. And so short-term treasury bond ETFs are where people are parking cash. And you also have stagflation. I forgot to mention stagflation concerns, of course, right? So rising inflation, weakening economic growth. This is a very trying and tricky time for a lot of investors. And as much as you keep saying to ignore all this noise and trade past it, people are not listening to you, Nate. They are not.
I still stand by that statement. I think for longer term investors, you have to ignore the noise. But a couple of things here. First of all, President Trump didn't just call Jerome Powell a loser, he called him a major loser.
Oh, I'm so sorry.
So we have to have that descriptor
I
in
didn't
there.
actually have his Truth Social up in front of me. I had read it a little bit earlier, but yes, yes. And Mr. Too Late was also what he called him.
Yeah, and obviously he's demanding that the Fed lower interest rates. Let's go back. So I'll make a couple points here. First, as it pertains to the ETFs, you mentioned these ETFs that are leading the inflows. I think it's remarkable. I mentioned earlier when we were talking about gold, there's 4,100 plus ETFs out there. And if you look last week, 4 of the top 5 by inflows were short-term treasury or corporate bond ETFs. I mean, that's remarkable. And if you actually go back and look at flows year to date, I show that SGov and BIL are number 2 and number 3 out of all ETFs in terms of inflows. The only ETF ahead of them is VU, the Vanguard S&P 500 ETF. And I've said this multiple times in the past. The bottom line is, I don't think it takes a rocket scientist to figure out what's going on here. If investors are anxious, as you said, and they're uncertain, there are way worse things that you can do than just park in short-term treasuries or even short-term investment grade corporates. And if you look at, say, SGov, the 30-day SEC yield on that is something like 4.2%. And I just think that given everything going on, you have some investors that are going to be content to just scoop that up, and they're going to wait for the clouds to clear up a little bit, and then they'll put that money back to work. Now, again, if you're a long-term investor, I stand by what I've said in the past, that if you have a long time horizon, you shouldn't really be overly concerned about what's going on from an investment standpoint. That's not to say there's not going to be some economic impact and that the market can't go down further, anything like that. I just don't think this is something you should be trying to trade based off, because it is just so volatile and uncertain. We keep talking about, we don't know what's going to happen from one day to another. So I'm not going to be a broken record there. But yeah, if you have a shorter term time horizon, it makes a lot of sense to me that maybe you'll just park in some of these short-term bond ETFs and let things clear up a little bit.
So I want to kind of just read some of these numbers. So I just talked about, or I was looking at the 1 week for some of those, essentially those 4 out of those 5 top ETFs in terms of inflows pulled in. I just did some rough off the back of the envelope math. Little over $9 billion of inflows in just the past week out of approximately 10 or 11 billion. Now I'm looking at year-to-date inflows. And as you mentioned, we have VOO. We've talked about this in our last episode, about 50 billion of inflows so far year-to-date. But then right after that, you have SGov, which has pulled in about 14.1 billion year-to-date. And then Bill has pulled in 12.8 billion. So let's just call it 13 billion year-to-date. And they are beating IVV, so that's the iShares Core S&P 500 ETF, VTI, that's the Vanguard Total Stock ETF, and SPLG. So it's broad market funds that they're handily beating right now. And then next you have GLD, which has pulled in about 7.8 billion so far this year, which we were just talking about seconds ago. What's interesting that you were talking about this sort of traders, I think that this market, I mean, traders have always existed, but it seems as if more people are interested in getting involved in trading in this environment than ever before. And that obviously makes sense. This is a market where there's a lot of volatility. And so there's a lot of opportunity for big wins to be made in these sorts of market swings. Because the leverage inverse trade, we've chatted about this several weeks now, it is back on yet again. And every time you see, VIXI, that's essentially the VIX short-term futures ETF. So trading off, the fear gauge. Every time VIXI rises, the leveraged inverse ETF fund flows also kind of go up like crazy. But yeah, I mean, listen, when it comes to stagflation and economic anxieties, a lot of people say, what should I do? And I mean, commodities, so we were just talking about GLD, and short-term treasury bond ETFs are 2 places that you should park your cash to take a more defensive position in a stagflation type of environment. So
did you see, we were talking about Trump and Powell earlier, but Trump also posted something like, he who owns the gold makes the rules. I know it takes back to the gold, but I thought about that in the context of what you were saying in terms of what's been doing well and where investors are placing money. But
yeah,
I want to make a quick comment on stagflation, because that's an important topic right now. And if you think about the Fed, they're in a very difficult spot, right? They have this dual mandate of maximum employment and price stability. And so if they hike rates, that's obviously going to hurt the employment situation, right? So if they're worried about inflation because of tariffs and they want to hike rates, that could be problematic on the employment side. And then if they drop rates,
the problem
inflation,
on the side.
Inflation could take off. And you have now President Trump obviously making these, public proclamations about what the Fed should and shouldn't be doing. And
keep in mind, Trump has also said that there is, and this is a quote quote, virtually no inflation is what the president said in that same tweet where he called Powell a major loser. So, I mean, under that premise, yeah, it makes sense to cut rates, but we also know that there is inflation. So,
Yeah, that's the issue. And again, just putting politics aside, anybody who goes to the grocery store, if you bought eggs this past weekend for Easter, or, and I know it's an easy one to point to, clearly prices are still
yeah,
elevated. And I think it's not difficult to see, depending upon what happens with these tariffs. I think that's inflationary, at least in the short term. If it ends up resulting in some real economic distress, obviously that could become disinflationary. But it's tough right now. I mean, all these things we're talking about, again, I'll bring it back to these short-term treasury ETFs. That's why investors are looking to
yeah.
that category. And I think we're going to continue to see that. I think we'll see fairly substantial inflows continue into this entire category.
So I'm going to, and I don't think that we necessarily need to answer the question, but I kind of want to just drop the question out here. A question that we had from, what was it, 2021, I remember asking, which was how transitory is transitory? Because we're hearing that sort of that pop back up yet again, that some of these moves that we're seeing are transitory. And I'm like, well, we've been here before in the not too distant past. And I think, you talk about trading for the long term, how a lot of these moves that we talk about are really buy and hold for years and years and years. But I think that there are some investors in retail investors that are potentially thinking, okay, but we are only, if all of these moves are happening because of the president's policies, we are only 3 months into his presidency. We still have 3+ years that we have to get through. And when you start then thinking of a time horizon of at least 4 years, that's not exactly near term. It is when you think about holding a portfolio for 30 years. Of course, 4 years is a blip. But for some folks, especially if they're older, 4 years is a long time for them, and their portfolio to be taking hits, and for their, retirement accounts to be taking hits, and for their personal accounts to really be taking hits. I mean, if you are 55, you're 60, if you were 70, I mean, I think I probably would be looking, I would definitely be calling my financial advisor and saying, what the hell are you going to be doing? And how the hell are you going to sort of navigate around this environment over the next 4 and 5 years? Because I don't have that much time as a 30, 20, 40-year-old.
Yeah, but that comes down into having the right asset allocation for
Right.
their particular situation, right? I mean, if you're somebody who you're a pre-retiree or you're in retirement, and depending upon what your income needs are, you shouldn't have, a huge exposure to the equity markets. If you really have a need for that money, and or if you can't stomach the volatility. And you're right, we're only 3 months into Trump's presidency, and so you look out and go, we have another, almost 4 years of this. I think that this is going to be just the status quo. This is what we're going to get. The markets are going to be more volatile. You and I have talked about this. This is the way things are going to be. But I'm going to keep telling you, because of the way Trump operates, I just don't see it as investable, because you can't gauge this from day to day. So unless you just want to throw your hands up and go, I just want out of the markets altogether because of this, like you just can't take it, fine, I get that.
Yeah.
But also, I think you have to recognize that, and again, this is putting politics completely aside, we don't know exactly how all this is going to play out, whether it be on tariffs or any other policies that are implemented. And the possibility does exist that these play out positively, that they play out positively for the economy and they play out positively for the markets. I'm not saying that's what's going to happen. I'm just saying we can't rule that out as a possibility.
No, it's 100% true. We have I mean, there could be, and it was the whole point of tariffs, for example, that we actually are able to negotiate a lot of really great trade deals that are net positive to the US economy and to US manufacturers and exporters, and even for the consumer. Very much a reality. It's a greater than zero possibility. I wouldn't even say that it's like a near impossible scenario, but you're absolutely correct. That is something
Yeah, I think
possible.
I think what investors should be thinking about right now is, can they stomach higher volatility? And I'm not saying just in this last, month or two or looking forward. I'm saying this is what it's going to look like for the foreseeable future. So if you can stomach the volatility, great. If you can't, then yeah, maybe you should be looking at doing some different things.
You should be listening to the Pulse podcast no matter what, because we'll talk about it
Always.
every single week. Okay, let's talk about well, not Kraken, but we did talk about Kraken last week. Crypto exchange offering stock and ETF trading. Well, let's now take the flip side, which is Schwab offering up direct crypto trading. So we're now going from the big mainstream brokerages to now offering up the ability to tap into the crypto market. That is pretty big news, I would say. I'm actually making light of it. I actually think that's huge news. I think that it was something to be expected. And it's supposed to happen at some point in the next 12 months. I don't know if you have, if you've read further sort of information on when we can sort of anticipate that. But I mean, a pretty big deal. And I think something that a lot of investors had really been clamoring for. And you and I talk about this a lot. And there's a democratization that has been happening in the markets that we both support. And I think that this is just another step in that. People want crypto. They want to add crypto to their portfolios. They should be allowed to do so. There should be no brokerage gatekeeping them from purchasing these assets, even if it's a bad decision in their portfolio. You have to give people the opportunity to even lose money if that's what they want.
Yeah, so just for a little bit of additional context here, this news came out of Schwab's earnings call last week. So Schwab CEO Rick Wurster, he said that their goal was to launch this direct spot crypto trading sometime in the next 12 months. And he said they're on a great path to be able to do that. And you mentioned Kraken earlier. I like the timing of this because we had just talked about Kraken rolling out ETF trading, right? Kraken's a crypto exchange, and now you have Schwab basically doing the inverse of that. And what did I say last week? I said this very clearly before this news. I said spot crypto trading is going to be table stakes at every major brokerage. Every single one is going to offer this. So I like the timing of this.
Of you and your predictions, they're almost always accurate. I'm gonna start calling you like Nate Stradamus or something like that.
I'll allow it.
That you should have a shirt maybe made with that. Because you always have some sort of prediction and it's usually always right. It's annoying.
But you hit the nail on the head in that it's about access. This is what investors expect, especially younger investors. And they want to have everything in one place. They want to be able to very easily invest in what they want to invest in. And so we can sit here and pontificate as to whether or not Schwab or whoever should offer crypto trading. That's not our call. As long as they're offering this in a compliant manner and doing everything that they should be doing, them offering that, I think is a good thing overall. It gives access. I do have to mention, so I after I saw this news, I started poking around on Schwab's website, and I did not realize they actually have a crypto webpage. So if you go to schwab.com/cryptocurrency, which I thought cryptocurrency was interesting because that term has kind of been pushed aside a little bit. It's much more digital assets or crypto assets. But anyway, if you go to this page, it basically touts the spot crypto ETFs. And then it touts Schwab's own crypto thematic ETF, STCE, which I know is up for an ETF.com award, by the way, this week. And then they also, very interestingly to me, they specifically note crypto-related stocks. So like Coinbase and MicroStrategy. And I had no idea this page.
Several. I think Fidelity also has a page like that, to be honest.
They do. Fidelity for sure does. I just didn't realize that Schwab did. And so as I took a step back, that just told me, this is the direction of travel, right? This is where things are going with all of these major brokerages.
It will be major when Vanguard joins in.
What do you think the chances of that do you think there's any chance that they actually join the fray on crypto?
Yes.
You do? I do too.
I do.
I
think we're going to get to a point where they're going to be the only person not at that party. And
Well, and they're also, we mentioned this last week, Vanguard partnering with Blackstone on private assets to bring those to retail investors. Again, if you're Vanguard, are you just going to exclude what is currently a $3 trillion asset class that has a lot of interest from younger
I don't,
investors?
I do
I don't
not,
think you can either.
I don't think they can. Now, I think the bigger question is, I think it's a matter of when and not if. And when I mean, we're in April, so we're headed towards the end of April. So I mean, we're not quite halfway through. I'm not sure if 2025 is the year, but if it is, I think we'll see it in the fall, winter.
Yeah,
Yeah.
my guess is it wouldn't be this year, but I have to believe they've had substantial internal discussions
Yes,
around what their strategy here is
yes,
going to be. And keep
yes.
in mind that their CEO that came in last year, he came over from BlackRock. We talked about this as well. Obviously, he was there when they launched IBIT or developed IBIT and got the ball
See
rolling on
how
that.
well IBIT has done. Also an ETF.com award nominee. Yeah, I think Vanguard is going to get to the place where they can't ignore it. If you're going to have Fidelity doing it, you're going to have Schwab doing it. You have BlackRock adding it to model portfolios. There's just going to be it's an untenable position to really dig your heels in. This is not a hill that I think any asset manager can really die on in terms of crypto. And so I do think Vanguard will fold. It's just a matter of when they decide to fold.
I keep saying I just picture Vanguard execs watching Bitcoin and Ether, like the price charts, just praying that it craters and goes down.
So that they could
So,
be vindicated in their
right.
position. Yeah,
But
well,
instead, like Bitcoin's been moving the other direction here recently. Anyway, yeah, the whole thing's fascinating, but I expect every major brokerage to offer spot crypto trading to include Vanguard at some point
yeah,
down the road.
yeah. All right. Well, we've mentioned ETF.com awards a few times, and tomorrow is the ETF.com award. Well, actually, no, tonight is the ETF.com awards. I forgot what day it was. So you're a judge. You're on our esteemed panel of judges. I am curious to know, because I won't give any spoilers. We'll do a special update for everyone, special awards, Pulse Awards show. Maybe. Uh, what is something that what's a category you're most looking forward to? And what would you say were some surprise nominations, do you think? Or were there none? Did they all just make so much sense to you?
Yeah, I don't have the full list here in front of me of all the nominees. I do recall there were several categories where, and I love this, especially some there's smaller ETFs, new ETFs that have come to market that were nominated. And I always love that because we're covering the full gamut here. You have the largest asset managers, you mentioned IBIT, you have iShares, involved in some of these awards. And then to see some of these upstart
We have
indie,
Fun Strat in there because Granny Shop
yeah,
ETF. We've Eagle Capital, which is also a kind of a tiny but mighty sort of squad that they have. Yeah,
I love that. So I love seeing those smaller issuers in there. So I'll be very interested to see, if any of those can win some of these categories. In terms of my favorite category, I know we talked a week or two ago, certainly the ETF of the year, that's it. There's just so much competition in that category. If you look, every one of those ETFs has a legitimate case to win ETF of the year.
yeah.
So that's a good one. We talked about the ETF ticker of the year being a fun category. I think just ETF issuer of the year, which encompasses more of a body of work, not just hinged on one product. I think I always enjoy that. But I told you, Kristin, I love this because it is a celebration of the industry. This is something that you and I were waist deep into it every day. And I just love this. I love to celebrate the innovation. And I'll go back to what I said a couple of weeks ago. Ultimately, it's the people behind these products. That's what makes the industry go. And so I'm looking forward to the award ceremony to connect with a lot of the people who are behind these products. And I think it's going to be a fun event. It'll be a festive night for sure.
So I'm particularly excited about two categories. Crypto ETP, of course, I'll leave that one to the side. But two that I think are really interesting given the year that we're in. So one, they're both new categories. One is the leveraged inverse ETF of the year. I think that will be incredibly interesting. Two of them are actually the Pro Shares Ultra Pro QQQ. One is so Pro QQQ, and one is a bear 1X shares QQQD from Direction. And then we have an NVIDIA long, that's NVDL as a leveraged one. We have one around MAG, two actually are around NVIDIA. So that's a category that I think is really interesting and fascinating, because I think that the leveraged inverse sort of category is just massively growing. And, I mentioned earlier, a lot of volatility, inspiring a lot of traders. The second category is emerging market ETF of the year, because emerging markets is a fascinating sort of space within the ETF industry at scale. And I think it's particularly interesting given what's happening right now with the trade war, what's going on internationally. And as we're seeing international have a nice sort of uptick, international actually outperforming US equities right now. So the emerging market ETF, I think, is going to be another really fun one and interesting one. I'm looking at them now. So
well, and that's what's neat looking at the nominees, and that this is sort of a look back in terms of the awards. But to what you're saying, looking at these categories and the ETFs, a lot of them are very relevant, clearly in today's market. So my mind immediately starts going to, okay, who's positioned well for next year?
That's exactly what I'm thinking. Some of these guys are going to look like geniuses, right? Once they win, and then, everything that's happening now. But we will have to see tonight what happens, and we'll be keeping everyone updated, of course, not only with the ETF.com awards, but everything else that's been happening in terms of the volatility. That's it for this week's episode of ETF Pulse. Thanks so much, Nate, as always, for rapping with me on all things to do with ETFs.